And from bonds to stocks, earnings season starts in earnest tomorrow, and investors will be watching what many of the big-name companies say. But their results and their forecasts come at a time when many of their stock prices have fallen sharply from their highs, despite the recent market upswing. Dominic Chu takes a look at why investors are approaching this earnings season with caution.
There's a reason why many investors are still scared about what's happening in the U.S. stock market. Sure, it looks like the problems in Greece have calmed down for now, as have the concerns over the Chinese market. Even though we managed to bounce after a recent pullback, an increasing number of individual stocks are still showing signs of weakness. Over half the members of the large-cap Russell 1000 index have fallen by 10% or more since highs over the last year. That means over 500 larger cap stocks are in correction or even bear market territory. Among them are companies like railroad operator CSX, computer chip giant Intel, and oil services giant Schlumberger. All three of those companies are slated to report earnings later on this week, and some experts think that there's a reason to proceed with caution.
Given that earnings growth this year is expected to be a more muted, anywhere from 0 to 2% right now, that would also point to more muted stock market returns over the next 6 to 18 months.
Not everyone is as pessimistic about corporate earnings growth, and the overall picture for U.S. stocks could be helped along by a sense that America is a safer market to be in, at least on a relative basis.
There are two key reasons why the market's likely to do well in the next 6 to 12 months. The first one is that earnings are poised to surprise to the upside, to come in better than expectations. And the second one is as the Fed renormalizes rates, it should actually convince investors that business conditions are renormalizing as well, which should be a big positive.
Ultimately, it's going to be more of a balancing act for investor portfolios and about evaluating risk tolerances in the context of an overall financial plan. Still, with as many stocks as there are in relative downtrends, caution is going to be an investing theme going forward, especially with earnings season getting into full force this week. For Nightly Business Report, I'm Dominic Chu.